Now, new this morning, longtime activist short seller Carson Block is out with his first ever investor letter, and it is a doozy. According to sources familiar with Block's Domino fund, which launched in February, the letter was sent to investors on Wednesday morning. Block describes how the GameStop short squeeze earlier this year spooked some of his investors, and he ended up starting the Domino fund with significantly less than $70 million he had planned. Currently, he's got about $30 million in commitments, though through August 6th, Domino had returned just shy of 11%. Joining us right now to talk about the fund and so many of the other interesting revelations from that letter on interest rates, Elon Musk, Chamath Palihapitiya is Muddy Waters Capital founder Carson Block. Good morning to you.
Morning.
Let's go through the letter because it is, as I said, it's a doozy, and you are honest. I should say this letter is not necessarily family friendly. There's some language in this letter, but let's start with Elon Musk because he's somebody I know that has frustrated the short sellers for quite some time, but it appears that you may have come around on him.
Well, and actually, I know you want to start with Elon, Andrew, but I just want to talk about the rates because that's what got me to Elon, right? Like I woke up last week, 3 a.m. one morning, kind of in a panic because I had this realization that I think in order to decarbonize the economy, I think central banks within several years are going to make it their express policy to keep rates basically at real rates at zero or negative levels. And but I thought, like, is this actually effective? And that took me to Tesla. And here's the thing. I have been extremely critical over the years of Elon Musk because he has lied a lot. He's broken a lot of laws. I don't like the way that Tesla rushes, I think, or encourages people to use full self-driving technology that is not full self-driving. And I think that makes the rest of us somewhat less safe on the roads. But the reality is Tesla has dragged the world's major auto manufacturers into taking electric vehicle design and production seriously. So it would have happened eventually, but for Tesla, it would not be happening to the extent it is now. And so that presents this moral quandary, right? When you look at somebody like Elon Musk, who, like, I don't think he's a particularly great human being, but he, is really what drove so much of this. And where shorts had been wrong was thinking, okay, well, Tesla can never be economic because it doesn't have scale. Well, they've been right and wrong. So Tesla's not economic. I mean, if you take out the accounting maneuvers, if you take out, the way that it's kind of conned investors into buying vaporware well in advance, in the subsidies and the credit and the carbon credits, it's not an economic business. But what shorts were thinking was it can't be economic because it doesn't have the scale. And we were thinking scale in terms of unit sales and manufacturing base. But really, the only scale that matters is capital base. How big is the market cap? Because as long as it's a mega market cap, Tesla can continue to raise money to subsidize these non-economic vehicles. And that really, like I said, has driven the large auto manufacturers to significantly shift their resources and their thinking. So that this is a creature also of these very low rates. So absent these low rates and absent Elon Musk, we're not at this point in the evolution of the electric vehicle. And it's an interesting moral conundrum.
Look, there's so many things to unpack here. Let me first go at the interest rate issue, because this realization in the middle of the night, you say that you've woken up believing that central banks are going to keep interest rates low to help decarbonize the world. Explain that.
Well, so when I woke up, so kind of a panic, because when you're a short seller, rates at these levels are not your friends. And I've seen a lot of really smart investors go out of business over the years, really because they were right in their theses, but it didn't matter because rates are low. So my first thought was, oh my God, like, I think this is going to happen, but why? And so I unpacked it initially, like by thinking about Elon Musk and how this low rate environment has enabled this, the development of EVs effectively at the major auto manufacturers. Right. That's what is necessary. I mean, because these are not economic. Decarbonizing
Carson,
the
but
economy.
Carson, you think that Jay Powell or Christine Lagarde are thinking about decarbonization when they think about where to put interest rates?
Not at this point, but I think in a few years, yes. Because, I mean, look, coming out of the global financial crisis, we had this emergency monetary policy for over 10 years, even though we weren't still in that emergency. And then we had another emergency, COVID. So that's obviously going to keep rates low for just some period of time. But I think the next wave of thinking will be, what, we do need to decarbonize. Right. Governments allocating, money on, from their budgets is not going to do it. This is the way it has to be done. It's a quasi-market solution, really.